Taher Badshah is Chief Investment Officer at Invesco Mutual Fund, and he's going to tell us if the market will do that or not. Taher, good morning. Great to have you with us here. Appreciate your time. Prashant this side. So, if you look at the NSE 500, right, I mean, the primary concern has been valuations. I think till about a week ago, the median price to earnings ratio for NSE 500 stocks was about 45. Many stocks high P stocks have corrected especially, but the problem is they were very high, now they are just maybe high. So where does it leave us, Taher? And it's kind of a tough one because it's essentially been almost, it's not new, right? These high valuations. We've had high valuations for a decade now, relative to history in that sense. So what's the new normal in that sense, and where should we settle? Your thoughts, Taher?
Well, I think, some of these obviously were somewhat a lot more extended compared to what even their own strong fundamentals would probably justify. And I think that part of the correction is essentially set in, and we've seen the impact of that over the last some time. I think it's also a consequence of the developments in the last some time, basically with regard to the narrative. Overall narrative has actually come as a significant negative surprise and affected the valuations of many of these companies. I think at one level, my sense is that we have somewhat turned significantly, risk-averse from an economic standpoint. In various ways, we've deleveraged to a substantial degree, whether you look at it in the form of either a fiscal deficit, or probably you look at it in the form of interest rates, liquidity, even regulation for that matter. I think in various ways, we are at that extreme, and I think we need to loosen up a little bit, because in doing all this, I think we are losing the plot as far as growth is concerned. And that is what is essentially creating this impact, because the confidence in growth is somehow, lessened in the course of the last 2 odd quarters. So I think that is something which needs to, the overall, market backdrop essentially needs to be rectified in order for some of these, valuations to hold up. But I think some of these franchises which have seen this decline, they are also at the same time pretty dominant in their own way. They have executed very well in the last some time. And therefore, in few of these which we also own, we are keeping our faith. We know that they are in a position to grow at least ahead of system rate of growth, well ahead of system rate of growth, if not in those very strong growth rates that they probably witnessed in the last 3-4 years. So I think some of these franchises at lower valuations or at more reasonable valuations compared to earlier would definitely start looking interesting.
Taher, hi. So I know you won't name stocks, but which are those pockets where you're not letting the price destruction sort of, change your stance or your thesis? I mean, I just want to throw in names of what we've seen in the last, I think, 24 hours. One is this entire quick commerce space, right? Where there's a raging debate on whether in the short term, at least, there's a complete lid on profitability and margins. The other space yesterday was EMS. I mean, look what happened. Dixon came out with pretty decent looking numbers, and we know their business, we know their margin profile, but the stock sold off as if there's some major calamity happening. So just, talk us through these two pockets at least.
So, both these pockets still look interesting to us. We believe that these are the pockets, like as I said, which will still demonstrate growth, which is well ahead of system rate of growth. But obviously there was an excessiveness as far as valuations concerned. We were aware of that, and we've still continued to hold some of these names simply because the fact that the pathway to growth and the visibility as far as longer term growth is concerned is still much higher in some of these names and some of these parts of the market. So I think yesterday for some of these names, or maybe over the last some time for some of these names to actually have declined, like as I said, is more a function of the backdrop. If the same set of numbers were probably reported by some of these companies 6 months back when the overall backdrop was relatively better, I don't think the impact would have been as high. But I think we've got challenged in terms of the outlook as far as overall growth is concerned. I think we are obviously affected by some of the developments from a global standpoint. We don't really have a full handle in terms of what the implications of some of these global policies, the way they are likely to turn, is going to either benefit or probably not benefit India. So I think that's where the problem lies. So I think it's nice that some of these names once again are probably likely to get into a relatively more reasonable zone. If these are enterprises which over a longer period of time are going to hold on well to their return on capital employed or return on equity, I think some of those valuations at least will form the lower end of their lifetime valuation bands, I would say. So that we have seen it in many of the other franchises, whether it is in consumer stocks or FMCG names, etc. And I think some of the same, much of the same thing is probably likely to happen in some of these businesses as well. Let's say, digital commerce, or probably you're talking about even capital market related entities. These are do have a lot of long-term structural drivers for themselves, and I think those will definitely support the valuations at a certain level.
Hi, Taher. Good morning. One space which you liked was the power sector, and various ways of playing in transformers, other companies as well. Some of them have come off considerably. Do you continue to hold that positive view? Stocks like Siemens also. Siemens has corrected, I think, more than 25% from its peak. Maybe valuations went out of whack, but there are very other pockets that have a longer runway. However, valuations seem to have got a little bit frothy. Your take?
So we are maintaining our confidence, Nigel, in many of these names as well, in these parts of the market too. But we also have to understand that some of these things are hostage to government policies and government spends, public expenditure, and so on and so forth. And we need that overall narrative to actually continue to provide that essential backdrop. But I think some of these entities have their own journey as well, because they are better configured, they are well positioned from the point of view of relevance in the overall scheme of things, their product lines, etc., the ability to participate in the change. So I think we have to, all these things do require a little more of patience. Obviously, we are coming from a situation where many of these stocks have done exceedingly well. So a 10-15% odd correction where valuations probably turn a little more reasonable is not something which is not par for course. I think we just have to kind of wait through.
Okay. So we've discussed, some of the sectors where you still remain optimistic. Taher, the other question in front of the market now is that whether there is any point in going back to the old favorites, PSU stocks, capex plays, whether it's PSU or private sector, or whether that kind of whole trade is over and done, at least for now. We are moving to the budget. It's anyone's guess whether the government really picks up on spending again or not. But how are you positioned on the capex side of the market?
So I think we have, at one level, I would say over the last 6-8 months, somewhat reduced our exposure. I wouldn't say a good lot, but we have moderated some part of it. I've told this earlier as well, that we've tried to diversify to whatever extent possible, keeping in mind that we also need growth. I mean, we can't necessarily get into pockets which do not necessarily provide that minimum growth requirement. I think it is better to target growth which is a little ahead of system rate of growth, even if you have to pay a little higher valuations than compared to looking at something which is probably well below that, and yet not as cheap either. So I think that we maintain, but we have tried to ensure diversity to whatever extent possible. So that's how we are basically treating it from an approach perspective.
The EMS companies, right, which you said, what should one pay for these companies? Yeah, how much on a PE basis you think? So 25 for some of these companies was very, very strong, 25 over 24. But growth rates will now settle down a little bit, right? I mean, still very high, 30-40% in some cases. I mean, on a PE basis, what are you willing to pay, Taher?
So Prashant, if you look at it, some of these EMS kind of companies have not necessarily slipped yet on their growth deliverable. I don't think we have the moderation that we've seen in their valuations is a function of the fact that the results have not turned out to be in line with expectations. Perhaps they are in fact on an aggregate basis better than expectations as well. And I think at some level, a few of these are also trying to increase their TAM. For which probably, the market is a little nervous in the short run, given the fact that, it will lead to perhaps fundraise, it'll lead to perhaps a little more leverage on the balance sheets, if at all, and, may depress return ratios in the short-term interim. So I think that is, once again, as investors, if these are companies, like as I said, which can grow well ahead of system rate of growth, and I'm talking about even on a moderated basis, they might perhaps be able to grow at twice the rate of the system. So I think at the minimum. So I think if that is the case, then they will merit significantly higher valuations. Hard to put a number because there are good number of other factors which also play a role from an environment standpoint. So, but I would like to think that these will command valuations which will be much stronger than what the rest of the market would probably do.
Okay, all right. Thanks a lot, Taher, for joining in and giving us a view on the markets. Looking forward to chatting up with you in the coming weeks.